the biggest IPO in history. Within days, it crowned the world's first trillionaire, and briefly, the company was worth more than Amazon or Microsoft. Then, from that peak, it shed nearly a third of its value in about a week. Same company, same month. So what is it actually worth? Here's why nobody agrees. You think you bought a rocket company, but the rockets lose money. The profit comes from internet beamed out of space. And it just bought an AI lab that rents its supercomputer to its own rivals. One ticker, 3 businesses, 3 futures. Welcome to Uncle Alpha. Today, one tool to value any company that looks too expensive to make sense. And one model for why these story stocks swing so hard. By the end, you'll take $1 trillion price tag apart, account by account, and decide which parts you believe. Quick note, this is educational only. I'm not a financial advisor and nothing here is investment advice. All investments carry risk. Do your own research. So let's take it apart. 3 accounts. We start with the one that makes money. Here's what almost everyone gets wrong about SpaceX. The rockets are the show, but the rockets don't pay the bills. This does. Starlink is a network of roughly 10,000 satellites, beaming internet where cables never reached. By June 2026, 12 million subscribers across more than 160 countries. And it's the one part of SpaceX that actually makes money. Last year, $11.4 billion, about 61% of the whole company, growing nearly 50%. And think about the model. You launch the satellites once, then customers pay every month, forever. It's a toll road in the sky, and the tolls are rich, a 63% cash profit margin. For a business that builds and launches hardware, that's a software company's margin. That's why SpaceX can bleed money on rockets and AI and still keep the lights on. Now a tool for any subscription business. Watch 2 numbers at once. Subscribers are doubling, but revenue per user is falling, from $99 a month in 2023 to about $66 by 2026. Why? Not because Starlink cut anyone's bill, but because the next million customers aren't in rich cities. They are in places paying $10 to $30 a month. So Starlink rides 2 escalators at once. More users, but less per user. Lay those 2 curves over any subscription company, and you'll see the story the subscriber count hides. There's a catch too. The next-gen V3 satellite carries 10 times the capacity, but it's too big for the old rockets. It only flies on Starship. So Starlink's future is bolted to Starship, the boldest bet in the whole company. Hold that thought. And the network points at 3 markets stacked on each other. 1. Broadband, the engine today. 2. Straight to your phone, no dish, already live with a major carrier since 2025. 3. The moonshot, satellites as data centers in space, running AI on sunlight. So that's account 1. One proven cash engine, software margins, quietly funding 2 giant bets. Which sets up the real question. How much are you paying for the toll roads that exist today? And how much for the 2 roads it hasn't built yet? Account 2. The rockets. And it runs on a logic that looks insane, until you see it. In 2025, SpaceX launched 165 times, a flight every other day, about 85% of every US orbital launch, nearly double all of China. The most dominant rocket in history. That launch business pulled in $4.1 billion and pours almost all of it into building the next rocket. $3 billion into Starship in 1 year. On paper, the division shows a small operating loss. Don't misread that. It's not a business that can't make money. It's one choosing to spend itself to zero, on purpose, to fund the next leap. Falcon is a cheap, reusable cash pump behind the bed. Engine and bed. Same shape as Starlink. Now a tool so you're never fooled by a big activity number. Look past the count and ask who actually paid for the seat. Of those 165 launches, only 43 were for outside customers. The rest? SpaceX flying its own Starlink satellites. That's not a sale. That's moving your own furniture and counting the trips. It's why launches scream record, while outside launch revenue grew just 8%. Count the dollars, not the trips. So why bet the farm on an unfinished rocket? Because Starship is a keystone. Every growth story runs through it. The next-gen Starlink satellites, the AI satellites, NASA's moon landing, Mars. None happen without it. One rocket, 3 arches. Pull the keystone and all 3 sag at once. So how hard is that keystone to build? Very. Reaching orbit is the easy part. The real prize is full reusability, landing the whole rocket and flying it again, because that's what could cut the cost of space by an order of magnitude. It's the hardest problem in rocketry, and the entire growth story rests on it. A rocket this ambitious gets flown, evolved, and counted on all at once. And here's the tension that should shape how you read the stock. Starship runs on a physics clock. Test, blow one up, learn, fly again. The destination isn't in doubt. It's when, not if. But the share price runs on the Wall Street clock. And Wall Street doesn't wait for physics. That gap, a near certain future, an unknowable timeline, is exactly where this stock shakes. And it gets wider with Account Free, the one that turned a rocket company into an AI bet. And it's the strangest of the three. This one didn't just lose money last year. It lost so much it pulled the whole company underwater. Take out the AI division and SpaceX made about $3.8 billion last year. Add it back and the whole company swings to a $2.6 billion loss. One segment burning $6.4 billion ate everything the rockets and satellites earned. The brilliant kid who runs up a bill bigger than the family's whole income. So why pull that in? An arms race. xAI beat one of the largest supercomputers on Earth, $18 billion of chips, to chase the lead in AI. But here's the twist, the sharpest fact in the whole story. Demand for Grok didn't keep up with all that hardware. So SpaceX, now xAI's parent, moved xAI's training onto its newest machine and leased the older one out. To whom? Anthropic and Google, its direct rivals. Over $1 billion a month from one, nearly $1 billion from the other. A machine built to beat the competition now pays its bills by renting to the competition. Failure or genius? Bears say it proves xAI can't win the model race. Bulls say it's the Amazon move. Turn spare computers into a cloud empire. Both can be true. Now the deeper question. Is this account a black hole or the glue holding the empire together? xAI's real shot was never a slightly better chatbot. 4 labs are trading punches and nobody's landed a knockout. Its shot is to become the brain inside Musk's machines. Grok inside a Tesla, inside the Optimus robot, riding on Starlink, reading X in real time. That's what a pure software lab doesn't have. A body, a fleet, and a fire hose of real-world data. A reminder, this is educational, not advice. Everything past here is a bet, not a guarantee. And this is where all 3 accounts finally meet. The engine and both bets run through one thing, execution. And execution takes 2 things you can't rush, time and money. So here's the last tool. Separate what a company does today from what it might become. You pay for today with analysis. You pay for tomorrow with faith. So let's put the company back together. One engine, Starlink, the only part that reliably makes money. And 2 bets on top. Starship, the keystone everything depends on. and XAI, the black hole that might just be the glue. That's what $1.75 trillion actually buys. Is that fair? Depends who you ask. At the IPO, investors paid about 95 to 110 times the company's total sales, closer to 150 times on Starlink alone, the part that actually earns. Among the most expensive mega-cap debuts ever. Morningstar says it's worth about 780 billion, less than half. Bears say everything above the engine is hope. Bulls say you're not buying 2026, you're buying 2030, when Starlink's everywhere, Starship's cheap, and the AI has a body. I won't tell you who's right. I'll show you what they're arguing about. The bets, not the engine. One footnote that matters. The shares you can buy get 1 vote. Musk's get 10. He keeps about 85% of the voting power. So you're buying a ticket on the rocket, not a seat in the cockpit. And here's the whole thing in one breath. The framework is real. The vision is real. The timeline is anyone's guess. That gap between a destination that looks certain and an arrival time nobody can pin down is why this stock swings the way it does. The volatility isn't the glitch. Is the receipt for a story this big. So here's what you take with you. You're never really buying SpaceX. You're buying one toll road plus 2 bets, at a price that assumes both bets pay off. Whenever a price looks insane as one number, break it into accounts and ask which ones you believe. That's the whole tool. Everything here was educational, not investment advice. Now I'm curious. Which account do you think the market is mispricing? The engine or the bets? Tell me below. Quant Trained, simply explained. I'll see you in the next one.